underneath the surface, we're seeing this rotation back into more speculative assets. We're seeing a rotation out of companies that were the Magnificent Seven, right? Apple, Google, et cetera, have been under pressure for the last few days. We're now seeing that money rotate into meme stocks. So here's what you need to know before the bell this morning. We have now had, because this is now the beginning of March, November, December, January, February, 4 months. So this is a 4-month advance in the market. This is one of the longest advances, as we talked about yesterday, since 1970. We've had 16 of 18 weeks positive. Now, here's the issue. The magnitude of this advance is roughly 20%. That's one of the largest 4-month advances that you have going back in history. These 4-month advances like this typically tend to occur just before a period where you get a fairly decent correction. So just keeping this in focus is that this is not normal to have an advance this long with this kind of low volatility. And we talked about this some yesterday, but again, we just remain confined to that trend channel. So again, yesterday markets hit the top of that trend channel. We sold off a little bit yesterday. Markets looking to open lower this morning. Again, we just continue to kind of operate with this very limited upside and a very limited downside. We just kind of seems to be stuck here, and markets just kind of gradually climb this stair step higher, which is fine because everybody's participating. It's all great. It's all good. But again, underneath the surface, we're seeing this rotation back into risk assets. I should say more speculative assets. We're seeing a rotation out of companies that were the Magnificent Seven, right? Apple, Google, et cetera, have been under pressure for the last few days. We're now seeing that money rotate into meme stocks. And yes, the meme stocks are now back into the market. So if you take a look at meme stock baskets as an example, they're grossly outperforming the S&P. So this is the most speculative type of investment out there. These are companies that are very speculative in nature. You take a look at what's happening with high yield bonds. So HYG, which is one of the high yield bond funds. And when you take a look at high yield bond funds, they're doing well right now because there's basically no risk in the market. So I'm willing to take on higher risk bonds that are subject to default. I'm willing to take those on. But the skew and also basically the volatility of these indexes and the yield that you're getting paid for these are extremely low. So you're not getting compensated for the risk. But again, this is back to that idea that I'm going to take on speculative investing to try to make an excess rate of return in the markets. Historically, this always turns out very badly. And again, we kind of go back through history and we look at these periods where we have these kind of excessive speculative outcomes in the markets. The last time we saw a very similar type structure to where we saw here, where you had, again, as we talked about technically, a very large deviation from the 200-day moving average. Again, this doesn't happen that often when you get these type of deviations from the 200-day moving average, combined with this real speculative investment attitude, right? So again, meme coins in the cryptocurrency space are back. Dogecoin, Shiba Inu, etc. Those are surging here over the last few days, in particular as everybody's trying to jump back into the crypto race. You have the speculative meme stock baskets. You've got IPOs. These are all types of speculative products that are out there. And again, when you have these periods of time where you have these very sharp advances in the markets, as you're seeing right now, particularly one that's low volatility as we have now, they all typically tend to correct to a bit of a larger degree than normal. So again, just want to be a little careful here with your speculative risk. Kind of keep a watch in your portfolio, rebalance your risk accordingly. Okay, that's what you need to know before the bell this morning.